Hey traders, Chris Buss here with Traders Profit Compass with a mid-session update for Monday, January 10th. Okay, wanted to run through our standard setup, the indexes, FATMAAN names, and also a few trades that we've got on. Had some significant technical developments, so I want to bring you up to speed. We had talked about this morning on starting with SPY daily. Assuming that we close below the 50 and close below our uptrend channel, that'll be our confirmed sell signal. What your posture should be now is if you got short, stay short below the 50 right here. Where is that? 463.40 is your kind of line in the sand. If we were to rally and break back above the 50, then that would count as a stick save, right? Break below, look below, fail, break back above. That would be a big head fake. So I don't think that's going to happen, but if it does, there you have it. Nothing good happens below the 50. Keep that in mind. Also, I forgot to say, if you're new here, run the video at 1.5x. I think you'll like that speed. I'm not the quickest talker in the whole wide world, and I don't think you'd miss anything by running it at an accelerated speed. Just taking a look at our indicators on the daily chart, we've broken below the 50 on the RSI. We've got a bear cross working on PPO momentum, so those are favoring more of a downside move. And also our next level of real support is testing these prior lows at 450. So that is my short-term target, 450, as long as we stay below the 50. So let's move on to the 2-hour. You can see we had the gap down. You had a sell signal here at 461, 461.50. Here's your 50. Here's the gap above that remains open. We came down to this level. We had marked on the chart at 459. We had one bar with a look down. Looked like they were going to reverse it, but no power at all. Now we're back below 459. I think you can stay short against that if you're still short, if you didn't cover anything, and look for a test back down here. And keep in mind, we do have an open gap from 456 down to, it's really only about $1 wide, but still there is a gap there. I think that for today, while there's always the potential of some big afternoon rug pull, we may come down here, tag the top of that gap and get a bounce there. So I think a lot of the impulsive selling for today is probably done. But that's all commentary. Go level to level. Now, I want to just jump back here for a second. Gather my thoughts here. Okay, I dropped the fibs in. You can see here from high to low. If you get a kickback rally, so for instance, if this comes into 461 at the 38% level, or comes up here to the 50, that would be even better. You want to be selling the rips. We're on a daily sell signal now. So the script has changed from buying the dips to selling the rips. So on these kickback rallies into resistance, and it doesn't matter, if whatever stock you might be trading, that's going to apply. Now all these overhead levels are going to be resistance for price to power through. So now the onus is on the bulls. They got to prove it. And what typically happens, especially, as this downtrend emerges, that they lose power on these kickback, bounce back rallies into resistance. And then what happens is all the people overhead think to themselves, oh my God, I'm lucky. I just, now I'm back to even, or now I lost less, so I'm going to get out now. And what happens is those bounces are met with selling from the people that were trapped overhead. So you want to be, at least in my opinion, selling the rips. Qs on the daily dropped down decisively with the gap down below 380. So now, as we've discussed, our technical target is 360. I've penciled in a gap that I did not have on the daily chart. I had it on the 2-hour, but I didn't have it on the daily chart. I think we come down here in the days ahead and at least kiss the 200, which is right here in gold on the daily chart. So if we were to get a kickback rally, come back up, fill this gap to 380, you hit it there. You hit it short there. Why? Because you've got all this overhead resistance that I think will be a wall. I think they'll be real tough for the Qs in this environment to put in some kind of big rally, break back above 380 and then, rip on to new highs. It's always possible. Have your game plan put together that you should be thinking to the short side as long as price stays below 380. If it were to break above, then we got to reevaluate. And like we always say, if you recapture a level, especially a major level like 380, then you want to buy that. Because then price will have proven it, recaptured a major level from below. Those are bullish events. But I think odds on favor are, number one, kiss the 200, probably get a bounce there, but then have that bounce fail and revalidate these lows back here at 355. That would be my base case. This is a live chart of the QQQ 2-hour. You can see it's starting to break back below 372. If you were short from up here, then what you can do is move down your pivot point to 372. Of course, time frame is everything. It's a lot different if you've got, puts expiring on Wednesday versus in February. I think, that'll affect your trading. But in general, I think we're going lower. And as long as price stays below 372, the door is open to that, the 200 and the lower gap. Here's IWM, live look. We're just falling. I think you can almost pencil in 210, a test here of all these lows back in time. And remember, this is a huge, not only a big consolidation range, but going back a year, if we start getting closes below, 210, 208, 206, that's going to project down to 190. And then that would look like IWM has put in a massive top right here in this consolidation range that would have, spanned a year. Moving down to the 2-hour, you can see that we put in this overhead gap here. We filled the gap below, and now we're nose diving down to test these prior lows down at 210. Actually, the low on the 30-minute chart was 209.50. So you can have that too. I'm sure if you're been following along, you have that chart there. You'll see that. Facebook, 60-minute chart, had the big gap down. We filled this lower gap, came down to 316, which is support. If Facebook rallies, into 324. Good chance it fails right there. Why? You've got a low, you've got a low, you've got a low, and this is where the volume over price starts coming in. I would take a shot at 324, and you've got a gap right here at 326. If it moves into the gap, then you gotta abandon your short idea. And if it came into the gap and then moved into it, then you can play for a gap fill. But I think it's pretty weak, and you've got a large line of resistance right here at 324 that I think is odds-on favorite to stop any advances. Apple. We had this support band nailed pretty well. We've got a big gap below at 168.50. If you had been short, hopefully you covered there at support at the top of the gap, and now you can recalibrate on your shorts to, on a break of 168.50, you can get short and then look for 166. Now, pretty interesting this morning, there was a furious rally out of the gap down and more or less came up to fill this gap. And if you had been Johnny on the spot and that was your thing, that would have been a great place to put a short on. But be that as it may, there's no gap there. That was my point. There's no gap above to enter. That gap has been filled. Now, that doesn't mean that if there's a rally above 170, you can't give it a try to go long, or it would have been perfectly appropriate and fine to say, I'm going to go long against the top of the gap. Again, these are just ideas for you and ways to think about particular trades and price action when you see them. After 4 hours, since the open, the gap is held. So whenever you see that, it's a good line in the sand to shoot against. Tesla, a look below 1,000. There was a rally to fill the gap, so the gap has been filled. I think your pivot point's 1,000 now, and you can stay long against 1,000 or wait for a breakdown. But I think that's your pivot point in Tesla right here at 1,000. And we looked at the daily chart this morning, so that's a very, very important level. Microsoft sent out a note this morning that if you were short Microsoft, I would cover into 305. We got that, and now we've got a little bounce underway. Take note of the gap down from 310 to 314. So there's a $4 window there if there's a rally. But the reason I said that is this was the back test of the breakout. So now if you're looking to the short side, what you're going to want to do is, once the gap fills, I would try a short there with a stop just above. And for sure, if there's some kind of big rally that drives price all the way back up to 321, I would short that there for the same reasons that we've talked about. All these people, anybody that's still in, knows they're trapped. So you're going to have a lot of overhead supply coming online at 321. And I think at this juncture, I don't think the bulls are going to have enough power to overcome that. I think, and it's very common, remember, breakdown, back test, fail. Very common move. So If you're actively trading, you can be long against 305. You can get long on a gap entry of 310. You can get long on a breakout above the gap, all looking for 321. But just remember, these are also potential failing points. So I'm leaning to the short side. So regardless of any bounce back trades, just keep in your mind, if you're going long, you're playing a counter trend move because the trend is now down. So any kind of bullish positioning, you're playing for a bounce. You're not playing for the trend. So the trend trade is lower. The bounce trade is higher. Amazon lost another level. I think you can be short against 31.75 if you had been short from anywhere up here. If you didn't cover down here, I would be covering that on a break above 31.75. I think you gotta, depending on your time frame and all that other kind of stuff, that would be a reclaim from below, and you can see prior low, prior low, prior low. So that's going to be a pretty big line to overcome. If it can do it, it'll be bullish, but that's going to be a big line of resistance. And remember, this is on the daily chart, so we're really just looking for daily closes on that one. Google. At this point, they saved it, right? Prior low, that was support. Look below, failed, and they reclaimed it. So right now, that's your line in the sand. That 2,700 down to 2,675. You got a little band, support band is the word I'm looking for. You get that break again. You got the 200 down here at 26.25, and I think you'd probably get a bounce there, and then you've got an open gap below. Netflix, more or less gone. If you're not in it already, don't even mess with it. You've got a level here right at the middle of the trading range at 515. That's going to be your next decision point. There were chances to short here, chances to short the 200, chances to short 560 here at the top of the $90 trading range. I mean, if you're not short by now, you can't short it here. You got to wait for this large volume over price bar to see how price reacts. I wouldn't be surprised if you got a rally. And like I said before, if there's some kind of rally that brings it up to 560, then that's going to be a place to short. And what you can do also is put on your fib retracement levels from high to wherever this candle closes today, or the low of the day, and then that'll have your fib retracement levels that you can use as gauges on the way back up to look for potential failure points. SMH, we're at the lows of the day. Notice this was a prior low right here at 288. Anything below that is going to open more selling. I want to show you the daily chart just for reference. We're right here. We talked about this $22 range. We're below it, and that's going to open up a move down towards 275, which was a breakout level. So if this stays below 290, and specifically breaks this 288 level, then that's going to usher in more selling towards that 275 level. ITB down 1.38%. If you're short in that, I would stay short. XBI, 2% drop. If you're short, I'd stay short. ARK, we're coming into some support levels for these ARK funds. Keep an eye on it. I mean, you can see here, I mean, there's not a lot there. So I'm not thinking that, this is going to generate a big bounce. But as I mentioned this morning, we've got the CPI print coming up on Wednesday, and then we've got PPI on Thursday. If those are disappointments to the downside, inflation's not as bad, and that produces a big drop in 10-year bond yields, I wouldn't be surprised if these put in a big green candle. So depending on when your expiration is, if you've got something near dated and we've got this, we've had a nice 3 or 4 or 5 day drop in these ARK names, you may want to take profits, let the dust clear, and then re-short it on either a bounce or if price drops. So that's a way to think about that. ARKG has dropped down below this little support ledge that I had. I'm still looking for lower on all this stuff. ARKK, notice that it's down almost 5% with Tesla, kind of holding its own. Tesla has not fallen apart. So that's pretty surprising. It just shows the underlying weakness in all the other names in that fund. And then ARKW down about 3.5%. I'm staying short on all that stuff for now. And I also wanted to show you Bed Bath & Beyond. A lot of us had gotten short on Friday on this break down around 14. Got a nice move so far. Let me update the chart, see where we're at. Yeah, we're down 8.5% just today. So that one's working great. We're way out in May. So if there's some kind of rally above 14, I'd be disappointed. I'll take it off. But as long as we stay below, I'm going to just keep riding this thing. I think they're in the Ponzi retail category. I don't think they have a value proposition. And technically, as long as it stays below 14, I'm looking for like 10, something like that. Even lower, the projected move, I think, on the weekly chart is down there around $8.50, $9. So that's what I'm gonna gun for on Bed Bath & Beyond. So let's wrap it up there. If you're new here, I hope you like the analysis. I do my best to give you really objective levels and coaching on ways to think about the trades that you're in. I really think that if you learn to trust me on the levels, you can devote 100% of your time on working on your execution, and that's really where the rubber hits the road. But it all starts with a level, and it all starts with having those objective levels, setting stops, keeping your stops, honoring your stops, and then letting the market work in your favor. And then if it doesn't, you get out of those positions quickly. Oh, I do want to mention, I did send out that note. XME, I was long, got stopped out. Actually, probably should have taken it off Friday. But all the shorts have more than made up for that. Also, AFRM, took that one off after a $13 gain in just a few days. That was a great trade. So if you were messing around with AFRM, I would reset your sights on $70. If it breaks 70, going down another leg. So anyways, hope it helps. Again, if you're new here, hit the subscribe button, hit the alarm bell, hit the post notifications, jump over in the show notes where you can drop in your email and join the team. You'll get an invite to the trading room. It'd be great to have you. So this has been Chris Buss with Traders Profit Compass with a mid-session update. Have a good rest of your day trading, and talk to you next time.